Hey traders, T7 here with Grok Trade, and at the time of this video, it is Christmas Eve. Merry Christmas to everybody. I'm going to crank out a quick video here right before we have our festivities on Christmas Eve. We're heading out with some friends, and we have dinner plans, and everybody's getting ready. And I said, hey, I'm going to see if I can get a video done here very quickly. But we're looking at the spiders. If you look here at the spiders, last week was an amazing run to the upside. We had a nice pop on the weeklies. You know, everybody up almost over 0.5% or more in just 1 week, which was a great move in the markets. But we're looking at the spiders. We have this high base. This high base, if you look here, we got this red line. We stopped right at it. The reason we stopped right at this red line, you look here, that was the previous swing high. That swing high, we stopped right at it. The question is will this turn into almost a triple top, where this is or just a nice symmetrical triangle, ascending triangle. Or will this blast through? Or will we continue to have a red candlestick, a white one, we keep going sideways here? I have an idea on what my thoughts are, and I'll give that to you at the end of the video. But right here, we have major resistance. We're at resistance. Last time we were at this resistance, we sold. Resistance, sold. At resistance, we sold. Got the resistance, we sold. We're at resistance. Will we sell? Maybe, maybe not. But if you look here at the diamonds, we're actually a little lower. We're not at the previous high, so it's relatively a little light here. But we went red, white, or red, green, depending on how your chart is. Usually indicative of topping type formations. If you look here at the NASDAQ Qs, we're dropping here, but it's in this bull flag type of formation. And if you look at a line chart, swing high, we broke over the top of that. So that is relatively fairly strong on how we ended the week last week. Not bad. Russell's 2000 was very interesting. If you go to a line chart, I want to show you this. You'll go to swing low. We broke that swing low. That area of support now is resistance. We dropped down. It should have been resistance again, but right at the end of the day on Thursday, because Friday we're off due to Christmas weekend, it closed above that line, guys. That is really, really strong with a crossover on the MACD down here, looking good. A bullish divergence on the RSI. This is just on the weekly. It's saying it was in a lot of trouble until the last part of Friday. That's showing some promise that we could rally to the upside. We do have moving averages there that we will contend with. If you look here at the financials, if you look here, we're drop. The financials last couple months, guys, has just been brutal. Okay, usually whatever financials doing, the markets will do. But we have this trend line. We got to take a look at it. Go to a line chart. Look at this. I want you guys to see this. Major support. We follow it up. Major support. Look at that line. I'm going to zoom this in so you can really see it. If you draw these trend lines correctly, you'll see. Look how it's a parallel move to the upside right there. See this? It's not breaking yet. This is saying that we could rally higher yet, guys. And we're coming into these moving averages. So it went down, and we're going up that trend line right there. And by the way, we have a class coming up January. If you want to join us, it's a Saturday, Sunday, Monday, 14th, 15th, 16th, I think it is, or 15th, 16th, 17th, something like that, January. Feel free to fill out the mentor form to get more information on that. But that is coming up. But check it out. It's the financials. The financials haven't broken down yet. Can we get above the 20-week moving average? We need to for the markets to stay bullish. We have to do that. So we're at this must bounce area. We have to bounce next week, or this could get really hairy and fast. If you look here at the silver is a buy. We hammered out. We talked about that, saying a buy opportunity. Sure enough, big pop. Gold. Last few weeks going up, we said that was a buy opportunity for gold. It continues to go higher. VIX is down, big drop. Last time we were down here at these lows, guys, puts us at early, in the mid-November, when we've been down this low in the fear, as far as fear is concerned. Bitcoin down. We have a bullish engulfing reversal pattern on the weekly and a tweezer bottom. Look for us to be putting in a low on Bitcoin and going higher. Ethereum is it healed itself. We came down below a trend line. We came up and healed itself. This could bounce also. We could be ready to buy this bull pullback on cryptocurrencies as a whole. So here are my thoughts to round out the video. Couple ideas for you here, guys. Number one, that in a topping formation, I've lived through the technology bubble pop. I started trading in '98. I've been trading 23 years in the live markets. I'm a professional trader now. Been trading using technical analysis, 23 years, and been teaching 17 years, and I've been teaching with my own company 14 years. Okay, to give you guys some history. With that background, I had a lot of experiences on market drops. So I've experienced 3 major market drops, not including flash crashes. Market drop number 1 was technical in 2000. 2008 was the financial crash, and then the COVID crash that we just had in 2020. Those are 3 monster crashes that I've lived through. The thing that I always see, except for the COVID crash, because that was an event-driven crash that it dropped very, very quickly. But what I saw in both the crashes, the financial and technical, was the fact that you'll have these monster up days, monster down days. So when I say monster down days, those are indicative or important to me if the Dow is down, let's say 1,000 points. So if you get 1,000 point down day, everyone's talking about it. But the very next day, you'll be up 700 points or 800 points. It'll rally back, and you'll think, oh, okay, that was just a scary moment, but we got our money back. No, that bounce, what happens is when you get the crash, a smart money getting out, the rally, our algorithms buying up that relative weakness and will drive it back up. The people who have not got out yet said, whoa, smart money is getting out. I want to get out. When it rallies back higher, those smart money will sell that and you'll get a red. So in other words, you get red, white, or green, red. Red, white, red, white, red, white. I call it the railroad track. I think I stole that from somebody, but you get that back and forth. We are seeing that a little bit the last few weeks. Okay, the last few weeks, if you look at a weekly chart, red, white, we're seeing that. We haven't had monster sell-offs yet. So we haven't had a 1,000 point, 1,200 point, 1,500 point, 2,000 point down day yet. When the market starts to drop and we put in the top, expect to see that. Okay, so there's number one. Number two is this. There's a 77% chance that we will rally the day after Christmas when we come back on Monday. I think the 27th, if I got my date right. We have a 77% chance that it's going to rally that day and chance at, going into Tuesday. After that, it can pull back a little bit, but usually going into the beginning of the year, the rest of the week, it has a high chance of being bullish, called the Santa Claus Rally. And going back 92 years, that's how we came up with this statistic of, around 77% chance that we will be bullish. Biggest drop we've ever had was way back in the 30s, and it was a 7.5% drop or somewhere around there. And outside of that drop, take that one off, the biggest drop that we've seen after the Santa Claus Rally is like 2.6, 2.7%. Still sizable, but not that bad. Okay. So there's a much better chance of going higher in the markets coming into the near future. The interesting thing is we have inflation. Inflation is the big problem that we have. Our debt is a bigger problem. So we have debt, national debt, we have inflation. We have a lot of on our shoulders, guys. So because of that, the question is, when will the house of cards fall for the markets, and when will the markets finally give up the ghost and start retreating downward, where we'll have a 1, 2, 3, 4, maybe even a 5-year pullback? We've been up 13 years almost, right? 12 to 13 years. What is half of that? Puts you around 5 to 6 to maybe 7. And so a 5-year pullback, because that's half the years. If you go up 5 years, usually you pull back 2 years. So if you're up 12 years, that's a 6-year pullback. But we've not experienced a 6-year pullback, a 3-year pullback is about the extent we've ever experienced. The question is, what will it look like on this next one? Because we're higher we've ever been before, guys, at record levels again. And this is a parabolic curve to the upside. It's like a rubber band. The more you stretch it, the more it will want to snap back. So always remember that. But I'm going to sign off with this. So this is a 10-minute video. And here it is. Guys, you've been with me either 1 week or 10 years. I want to say I greatly appreciate you guys. Much respect to each and every one of you. And I speak on behalf of the Grok team and my wife and my family, we wish you and yours a very Merry Christmas. All the best. Are you here?
Yeah.
And the wifey popped in. You can say
Merry Christmas.
I didn't expect that.
I know. I didn't expect it either. Merry Christmas.
Merry Christmas, everybody. And we're packing. We're heading to Indiana. We're traveling. That's all the stuff you see back here.
Yeah, sorry.
Okay. Merry Christmas. Bye.